Welcome to the Daily Macro Brief. It is Tuesday, March 31st, and today the markets are really all about the latest labor data. We're going to break down exactly what this morning's JOLTS report means and, more importantly, what it signals for the path ahead.
All right, let's dive right in. We'll kick things off with a cross-asset snapshot to get a feel for the market's posture right now. Then, we'll dig into the key labor market signal from that JOLTS data. After that, we'll connect the dots with what we call the macro transmission chain, lay out 3 potential scenarios for the next 24 hours, and wrap up with the key levels you should be watching.
Okay, first up, let's do a quick data-driven look across the major markets. This will really help establish where we stand at this moment.
We're going to start with energy. Brent crude is sitting at $102 a barrel. You know, this slight pullback from the recent highs is actually pretty important because it's helping to ease some of that immediate inflationary pressure that's been such a central concern.
Now let's move to volatility. So the VIX index, what a lot of people call the market's fear gauge, is right around 25. This lower reading suggests that the market has, pretty much digested the new labor report without any real panic. That's a sign of some underlying confidence.
And you can see that confidence reflected right in equities. The S&P 500 is holding firm at 6,528.
Yeah.
And despite some mixed signals you're seeing elsewhere, this really shows a surprisingly resilient bullish sentiment coming from investors.
But at the same time, look at gold. It continues to show strength at $4,674 an ounce. Now, this tells us there's still a really robust demand for safe haven assets, and that points to a layer of caution just bubbling under the surface.
And let's round out our snapshot with Bitcoin, which is stable, holding at $68,000. We really view this as a kind of barometer for the speculative liquidity in the system, and right now it tells us that liquidity remains quite elevated.
All right, so now let's turn to the day's main catalyst. We're talking, of course, about the JOLTS job openings report. This is the piece of data that really set the tone for all of today's market activity.
So the key takeaway here is that the report came in with a slight miss. The forecast was for 6.920 million job openings, but the actual number landed at 6.882 million. This soft print, as we call it, implies a marginal cooling in the labor market's tightness. And that's a development that equity markets really welcomed, because it reduces some of the pressure on the Fed to maintain a more hawkish stance.
So, how does a slightly soft labor report connect to steady equities and strong gold all at the same time? Well, it all happens through what we call the macro transmission chain. It's like a cause and effect sequence that we saw ripple across all the asset classes today.
This slide really illustrates the flow perfectly. So first, as we saw, oil prices moderated. That eased inflationary pressure just enough so that when that soft labor data hit, it didn't trigger a big flight from risk. Because of that, bond yields held steady instead of spiking, and that gave equities the green light to advance.
Okay, with all that context in mind, let's shift our focus forward. Now, rather than just making a single prediction, we prefer to use a probabilistic framework to think about what could happen over, say, the next 24 hours.
As you can see in the table, our most probable scenario is what we're calling controlled stabilization. This assumes oil stays in its current range and volatility remains pretty calm, which would likely keep the S&P between 6,500 and 6,550. Next up is the inflation pressure scenario, which is certainly plausible. This would get triggered if Brent crude pushes back above $105. That would likely cause the VIX to rise and equities to dip. And finally, our low probability scenario is a risk-off shock, probably triggered by a major surprise in tomorrow's ISM data. In that case, you'd see volatility spike, equities and crypto would fall, and you'd see a big surge into the safety of gold.
So to track which of those scenarios is actually unfolding, we've put together an actionable checklist. Think of these as the critical price levels that could signal a really significant shift in market sentiment.
So keep your eyes on these triggers. Brent crude above $105, that signals renewed inflation pressure. A VIX above 28, that means volatility is heating up. If you see the S&P 500 drop below 6,500, that's a clear indicator of equity stress. And if Bitcoin falls below 67,000, that's a big sign risk appetite is fading, while gold moving above 4,700 is your safe haven alert. So to summarize today's dynamics, markets are very carefully digesting a slightly soft labor report. Right now, the focus remains squarely on energy prices and safe haven assets like gold. And through it all, equities continue to show a resilient, if maybe a little cautious, optimism.
This all really sets the stage for the next big test. So, the key question now is this. Will tomorrow's ISM Manufacturing Price Index confirm the delicate balance we're seeing today? Or is it going to be the spark that reignites inflation fears and changes this whole story? That is what we'll be watching.